I won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to video 2 of this 3-part video series where we are discussing the global financial crisis that we are on the brink of experiencing. In the previous video breakdown, we discussed the fundamentals. I showed you all the warning signs that we have been giving to the general public on our Twitter space. Again, if you don't follow us on Twitter, make sure that you do so. The link is in the description down below. We've been giving everybody warning signs for the longest time. So in this specific video breakdown, we're going to be going over the potential outcome that could happen if we do experience this debt crisis. So I have some notes here for you all today that I'm going to be reading off of. So excuse me if I look over. Make sure that you all smash that thumbs up button if you enjoyed video 1 and you enjoy video 2 of this 3-part video series. Let's jump in. I'm going to also display some of the things that I'm reading to you all on the screen so that way you all can partake in reading it yourself. So I have my notes right here, and it says, if there is a debt crisis, the strength of the US dollar can be affected in a number of ways. A debt crisis can lead to a loss of confidence in the government and its ability to repay its debt, which can lead to a decrease in the value of the dollar. Additionally, if the government needs to borrow more money to fund its debt, it can lead to an increase in interest rates, which can also lead to a decrease in the value of the dollar. Furthermore, if the country goes into a recession, the demand for goods and services drops, which can lead to a decrease in the value of the dollar. So all of these things potentially brewing up have the possibility of affecting the dollar negatively. All right. And that's something that as investors, market participants, we need to pay attention to heavily. Why is this? Okay. So to further continue reading my notes, I have, during a debt crisis, investors tend to seek out assets that appreciate in value against a decreasing US dollar. However, it is worth noting that the correlation between the debt crisis and crypto prices is not always straightforward, as the market sentiment and other factors always play a role. Obviously, of course, that's something that we all have to take into accountability, things like regulations, things like uncertainty in the form of exchanges or certain projects, right? So I have written down, crypto markets are known for their volatility, and their prices can be affected by a wide range of factors, including market sentiment, regulatory developments, and technological advancements. So those are all things that we need to pay attention to as investors in this space if something like a debt crisis really does take place. Again, I'm not a financial advisor. I'm simply here just writing notes to you all, conveying information that is already readily available to the general public, yet nobody really pays attention to it. So I have written down here on my notes, this is the good stuff right here. A debt crisis in the USA could potentially have the following effects on normal US citizens. Okay, that's everyday average individuals like myself and yourself. This is where you need to pay attention. This is where, if you enjoy these video breakdowns, you need to share them with individuals that think like you and I, that have an open mind, that really want to protect themselves in case of a scenario like this playing out. So I have a list. Number 1, economic downturn. A debt crisis can lead to a recession, which can result in higher unemployment rates and lower economic growth. This can make it harder for people to find and keep jobs, and can also lead to lower wages and reduce opportunities for economic advancement. Higher interest rates. A debt crisis can lead to an increase in interest rates, which can make borrowing more expensive for individuals and businesses. This can make it more difficult for people to get loans to buy homes, cars, or start businesses. That is really bad for the economy. Okay. Reduce government services. In order to reduce its debt, the government may be forced to cut back on spending, which could lead to reduced funding for programs such as education, healthcare, or social security. Inflation. The government may print more money to pay off its debt, which can lead to inflation, which in turn can erode the value of people's savings and make everyday goods more expensive. That's something that myself and you watching this video will obviously be affected by, okay? Then last but not least, I have reduced confidence in the government. A debt crisis can lead to a loss of confidence in the government's ability to manage the economy, which can lead to reduced consumer confidence in spending, which can further worsen the economic downturn. These are all things that could potentially play out if we do see this debt crisis come into full effect. Now, the next part of my notes here, I have written down having your money in the bank during a debt crisis, especially in the USA, could potentially have the following negative effects on you. I have been mentioning to you all for quite some time, especially on the Twitter space, that I personally do not have my money in banks. You all should do your own personal research as to why that is. I'm going to give you all a list of some of the things that I found as to why having your money in a bank during a debt crisis is extremely risky, and why I myself have, I'd say, just enough money to pay my bills in my bank account, and then all the rest of my assets and my financial endeavors are spread amongst other investments out of the banking system. Okay, that's just me personally, not financial advice. That's just to protect myself in case worst case scenario where bank closures would happen, right? ATM shut down, things of that nature. Okay. So again, take some of the things that I'm reading to you all into consideration, do your own personal research and move accordingly. Bank runs, number one. A debt crisis can lead to a loss of confidence in banks and other financial institutions, which can cause people to withdraw their money from banks. This can lead to bank runs, which can make it difficult or impossible for people to access their money. Look at the scenario in Lebanon as an example, where people are literally going and holding the bank hostage to withdraw their own capital. Bank failure. Some banks may become insolvent during a debt crisis, which means that they are unable to meet their financial obligations. This can lead to bank failures, which can result in depositories losing some or all of their money. Next, reduced interest rates. During a debt crisis, banks may reduce the interest rates they pay on deposits in order to conserve their capital. Two more. I have reduced lending. Banks may become more cautious in lending money during a debt crisis, which can make it more difficult for businesses and individuals to get loans to start or expand their operations. And then last but not least, we have reduced access to credit. A debt crisis can lead to reduced access to credit, which can make it more difficult for people to buy homes, cars, or obviously, of course, like I said in the first half, start businesses. That is going to be extremely bad for the economy. Now, everybody laughs and says that this couldn't be an outcome. Banks can't shut down, right? A lot of people don't really remember what happened in 2008 and 2011. Let me remind you that at 1 a.m. on Monday, March 6th, all the way back in the 1900s, okay, I believe this was 1933, maybe 1930 off the top of my head, if I'm not mistaken. I don't remember my dates exactly. I think 1933. President Roosevelt issued Proclamation 2039, ordering the suspension of all banking transactions effectively and immediately. He had taken the oath of office only 36 hours earlier. So if you think that it's not possible, it is. And now, if you don't know what Proclamation 2039 is, it is also known as the Banking Emergency Act. It was issued by President Franklin D. Roosevelt on March 6th, 1933, in response to the banking crisis that was gripping the United States at the time. The banking system had become severely stressed during the Great Depression, with many banks failing and depositors losing their savings. The proclamation was an emergency measure that was intended to stabilize the banking system and restore public confidence in the banks. It did this by ordering a 4-day bank holiday during which all bank transactions were suspended, and by granting the president authority to regulate the banking transactions and examine the books of any bank. The situation over the years has only gotten worse, and that's something that everybody truly needs to pay attention to. Something is coming. I am not here attempting to spread FUD. I'm just attempting to wake people up as to what's really going on behind the scenes, and ask that you all take the information that I'm conveying to you all, which is just scratching the surface, and then you go do your own research and move accordingly, hopefully to protect your financial assets, to protect yourself and your family members alongside your friends, okay? Especially if we do see a mass depreciation in the United States dollar from past experiences. When there's a depreciating United States dollars, individuals are going to attempt to hedge against that. So usually risk on assets, or assets that trade against the United States dollar, increase in value. And crypto, in my personal opinion, again, not financial advice, is going to be one of those assets that benefits from a depreciating United States dollar. Okay, again, it's not guaranteed. It's just what it is that I'm assuming is going to happen in the near future. So now before we head off of this video breakdown, I have two fundamentals that I'd like to share with you all. Let's head over to the computers. Make sure that if you all are enjoying this content, if you enjoyed video one, if you haven't watched that, make sure that you go back and check that one out. If you enjoyed this video breakdown, again, me sharing this information for you all, hopefully it conveys a message. Again, just scratching the surface, bringing you all to do your own personal research on what's potentially going to be the outcome of our financial situation, not only here in the United States, but as a global economy. Make sure that you smash that thumbs up button, subscribe to the YouTube channel. It does help boost the YouTube algorithm, and we really, truly do appreciate it here at CYPRX. Let's jump over to the charts so I can share these last two fundamentals with you all before we head off of this video breakdown. So heading over to the two fundamentals that I'd like to share with you all before we jump off. This article reads, stablecoin collapse could impact U.S. bond market, economist warns. I found this one interesting, correlating to the previous Reuters articles that I shared with you all from the past video breakdown. Again, if you haven't checked that one out, the first video series of this three-part video breakdown, make sure that you go back and check that out. This one reads, economist Eswar Prasad warned that a bank run on stablecoins could fall out into the U.S. bond markets if issuers sell U.S. treasuries to honor redemptions. Perez warned that if a bank run should occur, while bond market sentiment remains very fragile, there could be a multiplier effect due to immense selling pressure on treasuries. A large volume of redemptions, even in a fairly liquid market, can create turmoil in the underlying securities market. And given how important the treasury market is to the broader financial system in the US, I think regulators are rightly concerned. Stablecoins such as USD Tether are backed by billions of dollars in reserves to accommodate mass redemption scenarios, according to USDT's November 2022 report. However, Prasad, or I hope that I'm pronouncing that right, warned regulators that if many users try to redeem their stablecoins for fiat issuers such as USDT, would have to sell off their assets in their reserves. Now, again, I'm not attempting to spread FUD in the market. I'm not telling you guys to not get into the crypto space. You guys know that I'm long-term bullish. However, I've been mentioning for quite some time that I am a firm believer that there is still going to be some type of black swan event that liquidates massive amounts of money from this crypto space. I could be wrong, and if I am, and we don't see that happen, I will bite the bullet and say that I was incorrect. But I just don't see that this market space thrives and has another major bull run with 21,000 cryptocurrencies still operating in this space, and with massive amounts of illicit market participants still operating in this crypto ecosystem. Again, move however it is that you're going to move with that information. I've told you guys what it is that I'm doing. I have money and capital that I'm willing to implement now to see massive volatile fluctuations, not only to the upside temporarily, but to the downside as well. And then I also have a day trading crypto portfolio for times like this, current bear markets that we are facing. That way I can get my quick dopamine fix and I don't have the need to sell or buy impulsively. All right. And then I also have money and capital that I'm willing to hold in reserves on the side in case price action does see lower levels come into fruition. Last but not least, I'd like to leave you all with this optimistic article right here from the Daily Huddle. It says crypto's next bull market will be the biggest ever, predicts strategist at a $1.3 billion fund. But here is the catch. The chief investment officer at Bitwise Investments crypto fund, Matt Haugen, is expressing bullish market sentiment. Haugen says, as an investor, the crypto markets are well positioned to stage a recovery and chart a path to a record-breaking bullish cycle. Mark my words, that would be phenomenal if we all experience that. However, I'm just attempting to get you guys to realize the potential outcomes that could take place in the near future. In the end, however, we believe crypto will recover. Historically, crypto has bounced back from every major pullback. Again, ladies and gentlemen, pullbacks in an emerging asset class and an asset class specifically like crypto are healthy. That is what has to happen. Bubbles need to pop, things need to pull back, so that way we can create another firm foundation on our ride to the top. Now, this continues. Technology, blockchain improvements like Ethereum's merge, scaling advances like the rise of layer 2 solutions and simmering stew of emerging new applications have us bullish. We suspect that the market will grind sideways for a period before entering into its next bullish phase. There is even a meaningful risk of another leg down. So again, this analyst is identifying that there could potentially be another leg down. I don't think that if there is another leg down, it's going to be a long one. It'll be a quick flash crash because of some black swan event, right? An exchange going bust, a crypto project going bust, or some crazy thing that none of us can predict. Be ready for that. Again, like I said, I personally have capital reserves on the side just in case that happens. But then I'm also, as an investor, understanding that from all-time highs on our utility-driven assets, we are 80 to 90% discounted. So I am implementing capital now. Well, at least I was back in November and December. And the majority of those callouts were placed on our Twitter feed. So again, make sure that you all smash that thumbs up button if you enjoy video breakdowns like this, showing you guys the devil's in the details. Pay attention, the debt crisis potentially unfolding here in the United States and how that would have a global effect on normal citizens across the world. As always, bringing you guys the realest video breakdowns. Make sure that you smash that thumbs up button, subscribe to the YouTube channel on your way out. Be cognizant, be aware, and I will see you guys in video part 3 of this 3-series video breakdown.
I won't stop till I hear him say